Hey, there we go.
Hello, everybody. Happy Tuesday to you, wherever you are in the world. For me, this is school vacation week in lovely
I don't
Rhode Island.
I
So
don't get that. We don't have school vacation week.
my kids are in the next room. So
Oh,
we'll
there
see.
you go.
Yeah, but they're older. They know to leave me. They know to leave Dad the heck alone. What are you up to this week, Stoffel?
Not much. I will say my son is in the other room too, but that's because he ran a fever this morning. So the little bit less fun, more whiny. But hey, we've got our first couple folks coming in. We've got T Dan from Romania. And this week we are doing a stock that is very different than the ones that we've been doing recently. We are
It's your
going into a very different area. We're going in for Novo Nordisk? And this, to be clear, before we even jump in, this is out of my normal pool that I swim in. So I just put that as a caveat emptor. But I'm curious to see what we find out. Hello from Belgium, from Southern California. Welcome everyone, and thank you for joining us today.
All right, I see that something is wrong with our regular live stream. It's telling us that the stream has ended, so something is happening there. I apologize to everybody that's trying to get in, but we will make sure that you get the replay of this, and you can also find it on YouTube. Stoffel, if you could go into Kit and just send everyone an email sending them to the YouTube, that would be fantastic.
You bet.
All right, great.
So if I'm quiet for the next couple minutes, you'll know why.
There you go. Well, thanks everybody for joining us as we teed up. Today, we're going to be researching a stock from scratch, and that stock is not United Healthcare. It is Novo Nordisk. Novo Nordisk, ticker symbol NVO. This is a company that has really taken it on the chin recently, down 66% or so in the last couple of months as for a bunch of reasons that we are going to get into. Now, if you've ever researched a biotech company like Novo Nordisk before, you know that these companies are kind of in the semi-difficult from an analysis perspective. You got to understand disease states, you got to understand drug, you got to understand reimbursement, and it's a weird scenario where patients, healthcare providers, payers all have say into these drugs. So there's a long regulatory process. So just know ahead of time, it can be hard to analyze these companies, but we will do our best. So let us know in the chat if you're here. Do you own this stock? Ticker symbol NVO. Let us know, yes or no, in the chat. I can say that I do not own this stock, although I worked in the diabetes industry for about 10 years. And I saw firsthand just how strong this company's pull is in that industry. It's effectively a triopoly with Eli Lilly and Sanofi Aventis. It was the top dog when I was in there, but that was before any of these GLP-1s really came to market. So very strong company. Looks like some people do own. Okay, yeah, we have a couple of shareholders here, a couple of prospective shareholders in here. No, yes, not yet. There you go. Love to see that. Cool. So very cool to see that. By the way, if you're new here, my name is Brian Ferraldi. I've been investing in individual stocks for about 20 years. My partner here is Mr. Stoffel. He is the green line here. The reason that we have done well over time is that we are big believers that research builds conviction, conviction enables patience, and patience is what enables compounding and wealth building. So we believe that you start with research, that builds conviction, that enables patience, and that is how you make money in the market. So our goal here is to teach you how we do the research process on a stock that we have never studied in depth before. Now, we're going to be using Stock Simplifier, the tool that Stoffel and I made to do this. Stock Simplifier is a 7-step research process that we're going to go through here. Now, if you're unfamiliar, Stock Simplifier has a full course that teaches you everything. It's got a spreadsheet checklist that we use, and it's got these AI prompts. So we're going to be using the AI prompts, and we're going to be going pretty quickly through this process. If you're like, I wish they would slow down, or what does that mean? Everything is covered in Stock Simplifier itself here. And we are going to be using, as I said, AI to go there. So the first question that we need to answer about this company is, which of the 6 stages of the business growth cycle do we think Novo Nordisk is in? Let us know in the chat, which of these 6 stages do you think Novo Nordisk is currently in? While we wait for those to come in, what I'm going to do is go to Stock Simplifier. I'm going to open up a fresh copy of the spreadsheet. This is what it looks like when we click to open a fresh copy.
And I have sent that email to alert our members. Hopefully they see this. Boy, I tell you what, this is kind of interesting, Brian. We normally don't get a range of 3 different phases of the growth cycle, but we are getting we're getting the whole second half here.
Great. 4, 5, 6.
Got some 6s.
Yep, all over the place. Cool. So what we're going to do is we're going to go and we're going to copy the business phase analysis prompt that we have here in Stock Simplifier, and we're going to use Gemini again to do the analysis. Gemini has taken over my personal AI usage, and I really like Gemini a lot. So we have a prompt here, and we are going to put it in here. And let me just
let's see if you can zoom in a little bit. There you go.
Okay, so the ticker here is Novo Nordisk, NVO.
Boy, I tell you what, this is a good point. Someone says, well, what stage of the growth cycle? Kind of depends on which drug you're talking about. That's a fair way of looking at it.
You are absolutely right to point that out. But when we're talking about the business as a whole, not the individual drug. So when you dive into drug companies like this, there's always drugs that are on the upswing or on the downswing, at least for the major big pharmaceutical companies out there like this. All right. So Gemini says it's in the phase 5 capital return phase and it has high confidence. Now, why is that the case? It has positive operating income of $14 billion. Its revenue is growing about 10% per year. And it has a capital return program. Intern dividend of DKK, I think that's Danish kroner, of 375 was paid in August of 2025. So therefore, the most useful valuation methods are the trailing price to earnings ratio, the trailing price to free cash flow ratio, and a reverse DCF. Why does this fit? Because the company is mature with stable operations and current returns, and we do not want to use high growth multiples or forward approach to sales. Now, what does this mean for investors? What they're doing, they're dominating the global GLP-1, obesity and diabetes markets, while optimizing their cost structure through a 9,000 role workforce reduction.
That means they're firing 9,000 people. That's pretty big.
That is enormous. And I would question the dominating the GLP-1 thing.
I would too.
Why this matters, the shift to phase 5 indicate has moved past the growth at any cost stage and is now focused on heavy R&D manufacturing with consistent shareholder rewards, focus on trailing earnings and cash flow, and capital returns are impacting the U.S. Medicare price negotiations, which may pressurize realized prices for Ozempic and Wegovy. All right.
A couple of people were wondering if you could zoom in even a little bit more. There you go.
Yeah, happy to. All right. So for Stock Simplifier here, we're going to enter the stock symbol as NVO. It is a $165 billion market cap company. And we are going to choose the capital return phase 5 analysis here. So the capital return phase is where we are. And step 1, after we figured out which phase it's in, is we're going to go see what does this company do and how does it make money? So we got the business analysis prompt. We're going to load it in here. So you want me to zoom in on this, Stoffel?
Yeah, if you could zoom in on that too.
There you go. All right. So we got that prompt. We're running it. All right. Business analysis. What does the company do? Novo Nordisk is a global healthcare company with a 100-year history of leadership in diabetes care. It specializes in discovery, development, and manufacturing of biological medicines. While its heritage is in insulin, the company has pivoted to become the dominant player in GLP-1 therapies for type 2 diabetes and obesity. How does it make money? Makes money through the sale of pharmaceutical products. This was 30 billion Danish kroners, or about $45 billion. So of that number, diabetes care was 67% of revenue, including those GLP-1 treatments like Ozempic and Rybelsus.
Yeah.
and insulin. Okay, so look at that though. Ozempic and Rybelsus were 152
Now,
billion. Insulin only 53 billion.
You'll have to tell me, is Wegovy and Ozempic, are those the Novo branded drugs?
Yes.
Okay, and they're the same thing. They're just have different names based on the treatment. Is that right?
Yeah, I don't know if the labeling is different. I don't know if the injection type is different. I don't know if the duration of the product is different. So I don't know the exact distinction between them, but I do know that there are different types of GLP-1s.
Okay.
Yeah, that's just the broad category, and they have differences between them.
So we're talking, just to be clear, we're talking about GLP-1s accounting for, I mean, it looks like over 85% of revenue.
Well, GLP-1s were about 152 billion of the 309, so about half.
Although the obesity care are GLP-1s as well.
Oh yeah, you're right. You're right. Yep. So add that in as well. Yeah.
That's a lot.
Huge. As go GLP-1s goes this business. Basically.
And as Matthew is pointing out, Wegovy is a pill, Ozempic is an injectable.
There you go. Thank you for that.
Thank you.
Thank you for that. Okay. So either way, again, from an investor perspective, GLP-1s are everything.
Yep.
All right. So who are the customers? It does not sell directly to patients, but a complex chain of stakeholders, wholesalers and distributors, McKesson, AmerisourceBergen. If you're an international investor, your head is going to spin about how the craziness that goes on behind the scenes of how drugs get to patients' hands. There's payers, there's governments, Medicare and Medicaid, and then there's the providers. So the hospitals, clinics, and pharmacies that dispense the medicine. Okay, where does it operate? 2 geographic segments. North America is 55% of revenue. International is 45%. So it's a 50-50 split. All right, next, qualitative questions. How often do customers buy? The business model is highly recurring. Diabetes and obesity are chronic conditions requiring long-term, often lifelong treatments. Most products are administered weekly or daily, leading consumers to constant refills. However, these companies face patent cliffs where exclusivity ends, such as the upcoming loss of exclusivity for a semaglutide in certain markets. That is the downside of investing in pharma and biotech companies.
Wait, let's just, because I know we're going to get to it in a second, the risk, but that's kind of a big deal if there's one class of drugs, GLP-1s, that are over 80% of their revenue. And, you know, we obviously need to find out more about those patent cliffs, but that's a pretty serious existential risk.
It's huge. Yeah, it's the downside to investing in any sort of pharmaceutical company. I will point out there is a difference between pharmaceutical companies like Pfizer and biologic companies like Novo Nordisk. Biologic drugs are often synthesized from, boy, I'm going to really screw up the science here. Just know at a high level, pharmaceutical products, chemical-based products, very easy to copy and replicate. Biologic drugs, they're typically like produced as enzymes from cell, way harder to replicate. So much so that when they lose patent exclusivity, the tailing off of their sales is way slower than it is for pharmaceutical drugs.
Got it.
And that is a positive for Novo Nordisk.
Okay. Got it.
Okay. Can it raise prices? Novo Nordisk currently faces significant pricing pressure. While demand is at an all-time high, the company is strategically lowering prices to expand insurance coverage and compete with generic compounded versions. This is
can you explain that
of the world.
I'm gonna pretend like I'm an idiot, because when it comes to this, I'm not that far from being an idiot. If you have a patent, why can there be generic compounded versions? I thought the whole point of a patent is that you can't do that.
So there are these things called compound pharmacies, and they can kind of whip up drugs. It's almost like a side door to getting them. So like, I think that's how, for example, Hims is able to sell GLP-1s, and you kind of can get around it. It's usually a small percentage of the market, but obviously the demand for GLP-1s is so enormous that there's huge economic incentive to do it.
Okay.
But I think that Novo just sued HIMSS.
They just said that they would, and the government came out and said that they were going to crack down on hims and hers doing this compounding.
Gotcha.
Which is why hims and hers is down so much.
Huge. Yeah. All right. So either way, gross margin is under pressure, 85% down to 81%. And additionally, the U.S. government, Medicare, and most favored nation agreements are expected to further compress his prices starting in 2026. So big time margin pressure ahead. Big time margin pressure, in part due to their strategic plan, but in other part due to the Trump administration, effectively.
Okay.
Hey,
Brian, real quick, we've got a bunch of people saying, is there any way to make sure that when we're on mobile that we are in the landscape mode? A bunch of people are saying it's in portrait mode and they can't see anything on the screen.
I don't know the way to swap that. I've played around with that a little bit.
All right, we'll take note of it and make sure that if there's something we can change next time, we'll do that. But
yeah, I've played around with the setting. I don't think we can do it. If you have the option, it's much better to view this on YouTube than Instagram. But we know that requires switching over to a different app and stuff. Okay, so what happens in a recession? Pharmaceutical is non-cyclical. This is a major plus of pharmaceutical. Patients prioritize life-saving medicines, even during economic downturns. The healthcare sector is defensive haven. A recession could lead to higher unemployment, causing loss of employer-sponsored insurance, which might shift the payers towards lower margin programs. So lots going on there, but that's the business at a high level. It sells pharmaceuticals. It's facing huge pricing pressure. So the pluses, recession-proof, recurring revenue. The downside is pricing pressure. So I would love to know from the audience here, what do you think of this business? Red, man, I'm confused. This sounds like a terrible business. Yellow, I get the gist. Sounds like a good business. Green, this sounds like a very strong business and business model. And remember, we're just talking about the business. We're not talking about moat. We're not talking about growth. We're not talking about anything like that. Just focus on the core business itself with the pros and cons in there.
Yeah, I would, I'm waiting for what other people have to say to roll in here. We've got a yellow, another yellow. I think yellow would be where mine is as well, Brian, mostly because it looks to me like it's a business that's got a product that's super important, but I need to understand more about the competitive dynamics of it all.
Yeah, fair enough. I would call it yellow from a business perspective, because long, heavy investments in R&D. Once you get it to market, there's often competition. You do have an effective monopoly on that drug, and there is recurring revenue and stuff like that. But the patent cliff, to me, makes like all these drugs have an end date that does tail off. So I could understand if you love pharmaceutical investing, I'm personally going to put it as a yellow for me, given the patent perspective. But I totally understand if other people are just like, I am super interested in this business. All right. So fair enough. All right. Moving on. We now understand a lot about the business and it's attractive. By the way, if you want to get access to all the AI prompts, the checklist, the course, everything like that, if you're interested in Stock Simplifier, it's normally $199, but Stoffel will share a link in the chat that you can get it for $99. All right. Up next, the moat. Do we think this company has no moat or a weakening moat, a narrow or stable moat, or a wide and expanding moat? So red, yellow, green. Now, there are 5 different sources of moat: network effect, switching costs, low cost production, intangibles, and counter positioning. There are 3 potential directions, states, and then the 3 potential directions. Would love to know from the chat, what do you think is this company's biggest moat source? Now, it might have multiple moats, but what do you think is the number one most important moat for this company to take that is taking advantage of? So while you're waiting for that, I'll copy over the prompt. I'll go to Gemini and we will run it and we will see what it says. I know which one I would pick. I'm curious if Gemini would say the same.
And,
okay.
Well, before it shows, why don't you tell us which one would you pick? Because I know what I would pick as well.
Intangibles.
Same here. And specifically, as we've already talked about, patents. Yeah,
correct. To me, it's intangible assets. There's definitely probably some low cost production. Maybe not. There's no network effect. Ever so slight switching costs. no counter positioning. It's doing the same thing as others. It's all about government granted monopolies, aka an intangible asset. So, all right, this says moat is wide. This says it's stable, and the primary moat sources are intangibles and low cost production. All right. Novo maintains a massive competitive advantage through its dominant patent portfolio and specialized large-scale manufacturing of the complex biologics. So yeah, this is where the biologics make it harder for copycats to create the exact same drugs. Despite 2026 pricing headwinds, the company controls 60% of the global branded GLP obesity volume as of early 2026.
Huh.
Switching costs, stable. It says yes. Switching costs are high because diabetes and obesity are chronic. Once a patient is critically stable on a titration of semaglutide and has navigated the onboarding side effects, there is significant medical and psychological friction to switching to a competitor's molecule. This is reinforced by the integrated delivery system, like the pens, which patients are trained to use. I would not have thought of that.
I wouldn't have either.
So I doubt the wide aspect of it.
Yeah, I doubt that too. But
I'll also give them some switching costs.
That is behavioral, and we oftentimes underestimate that.
Yep. More so from a switching cost perspective, nurses and doctors are trained on how to use the pens and how to teach the pens. They typically learn how to use all of them. Like it's not like a big thing. It's more teaching someone how to give an injection more so than anything else. But anyway, all right. So 46 million patients treated globally, 46% market share, high switching cost patients are stable. Okay. Next, intangibles, wide and stable. The company's primary defense is a dense thicket of patents, while the core semaglutide molecule technically expires in 2026.
That's got to be why it's down 66% from its high.
Patent term extensions and follow-up patents for delivery devices and formulaic extensions in the U.S. effectively U.S. exclusivity to 2032. Furthermore, the names Ozempic and Wegovy have achieved Kleenex-level status in pop culture, providing massive marketing leverage.
Just as an aside, really quick, my kids know the Ozempic song on the commercials because it's on during the Olympics so much. So I actually believe that. Okay.
So this says 2032. This is fairly common that you like have different delivery devices, formulations to extend patents. Pharmaceutical companies have all kinds of tricks that they can use to extend out the patents of their drugs. And obviously they have a massive incentive to do so. So I would agree with the wide, and I'd also agree with the stable personally. Okay. Network effect, none. No, I would agree. Low cost production. Okay, this says low cost.
I mean, they say wide. I'm just not sure. If there's three, the thing is, if there's three global players, well, then you don't have that moat. Like, you might have that moat against an upstart. But look, if there's three players and all three can produce something at the same cost, that's not a moat that's going to help you as an investor.
Correct. That's an important point. Low cost production only matters if you have a huge edge over direct rivals. So let's say there's one company with 60% market share. Everyone else has like 5% or under. That's a low cost production moat.
Yes.
Novo Nordisk is only one of three global players with Eli Lilly and Sanofi capable of manufacturing high volume, high quality insulin and GLP-1 biologics. I know for a fact that Amgen is working on a GLP-1 biologics, so I would disagree with that. The complexity of fill-finish sterile product manufacturing for pens is a massive barrier to entry. Don't know if I buy that. And their acquisition of Catalent sites further verticalizes the supply chain, lowering long-term marginal costs compared to new entrants. Okay. All right. So counter positioning. No, it is the incumbent.
Yeah.
Okay. So what is the primary risks? Pricing power erosion, definitely something to keep in mind. Realizing prices down by 20% for semaglutide. Competitive landscape, Eli Lilly's tirzepatide, which is Zepbound and Mounjaro, again, two other big brand names, has already begun taking market share. Eli Lilly's GLP-1 sales hitting $36.5 billion, rivaling Novo's. And then
Wow, I
valuation.
mean, look at that. That's pretty close. So Eli Lilly has 36 billion in 2025, and it looks like Novo had less than that, which again makes me wonder about that market share part. Like it just maybe they're getting paid more per pill, Eli Lilly is, than Novo is. I don't know.
We might be able to in fiscal to pull up both sales of both and kind of compare them and see. But I know at a high level that Zepbound and Mounjaro, Eli Lilly has been eating market share
Okay.
in the space.
And are they doing that because they have lower prices?
I don't know what the benefit is. It might be a clinical
Okay.
benefit, and perhaps that's something we can ask them about. But either way, again, let's stay focused on hand. Does this company have a moat? So red, no moat. Yellow, some moat, looks pretty stable. Green, moat is a mile wide. What do people think? And I'm very curious to see what you would think about this as well. Because again, we're not talking about growth. We're not talking about market share. We're just talking about, does this company itself have a moat? And is that moat stable? Is it expanding? Is it wide? How would you rank this?
If it was up to me, remember the whole point of a moat is that you can keep the competition at bay. So the patent is clear, and there's no doubt about the fact that the patent exists, and it looks like it can extend until 2023. But look, if there's someone else who's offering something that purports to have the same benefits and they're taking market share, that is the very definition of a weak moat. If you're losing market share, then I just don't see it. So to me, yellow.
Okay. Yeah, I was going to say yellow. I would also say yellow. I have a hard time giving it green. They definitely have green with some of their drugs, but obviously the story here is GLP-1s. And,
Absolutely.
I think that they have size, scale, they have distribution, they have brand names. It would be very hard for an outside person to come in and take market share from them. But of the major rivals that they have, there's obviously big rivalry between them. So I would also say huge barriers to entry, but the competition is real for sure.
Yep.
All right. Okay. Next is growth. Great. Next is growth. Now there are two primary ways that companies can grow. You either get new customers for your existing drugs, or you get existing customers to spend more. Now, if we pull up fiscal, so let's go ahead and do that. And I'm going to type in NVO. Oops. NVO.
You put
it
VO. There you go.
So you have to click this down arrow right here and then pull up the New York Stock Exchange version. So I'll zoom in.
Ooh, look at that. That is a steep fall.
So this is a company that's growing revenue 20% over the last 3 years, call it 10% over the last 10. So revenue growth has accelerated, but over the next 2 years,
I mean, that's it right there, right? Like that's why we're seeing what we're seeing.
Negative revenue growth is expected and negative earnings is expected. And over the very long term, the market is calling for mid-single digit growth. So that's at a high level. Now we've done this before, but if we look at, let's switch this over to USD, not DKK, and let's go ahead and pull up revenue. So very pretty, right? This is trailing growth. So
can you pull it forward? Because if you get
so that's what I was going to do next.
Yeah, okay. Because if you get the paid version of fiscal, I mean that explains. So the interesting thing here, Brian, is that on a forward sales basis, I mean they're expected to have a pretty banner year.
Yeah,
right.
According to unless this hasn't been updated. I'm guessing they usually update these things very quickly. But either way, you never want to see down.
No,
you never want to see,
especially not that much. I mean, that's a steep fall.
Yeah. So again, if we go back to the company's kind of price chart here. Yeah. So this is effectively predicting that growth, and then oh crap, the growth is not permanent. But price today is basically where it was in 2023. Basically in 2023. Now, if we might be able to dive into the key metrics by drug.
If they have that, yeah, I don't.
They
This isn't
definitely
again an
will.
area that I play in.
Segments and
Yeah, look at that.
KPIs. So this is GLP-1. So 2 billion back in 2016, 23 billion. I don't know if I can pull this forward. Yeah, I can't pull
No.
this forward. That is total revenue growth. So this is a business growing, 23% per year. Long acting insulin.
But you can do total insulin there, yeah.
Yep.
And you could stack those so we can see.
So look, total insulin is declining.
Yeah.
All right. So
now it is worth pointing out too, if you go down again, I know it says total GLP-1 revenue, but it looks like Wegovy, because we know that wasn't included in the total GLP-1, but we know that that's basically GLP-1 as well. So,
yep.
Yeah.
So rare disease revenue. And if we take this off, and this is diabetes and obesity care.
Yeah.
So yeah, you kind of have to go kind of segment by segment. This is when it gets a little confusing for each of them. But let's look at Wegovy, and we will stack them.
But again, the red and the green are kind of in the same bucket.
This is Wegovy. Right. You can see how important Wegovy is becoming.
Mm-hmm.
Rare disease is pretty stable. Call that a cash cow. Insulin is declining. I wonder if Wegovy is causing people to go off of insulin.
Could be.
Right.
Sure.
That could be happening there. And then this is GLP-1. So GLP-1 is still growing, and I don't know why they would break that out to be different. Ozempic, Wegovy, and Victoza. So let's do a quick search. So what's the difference between Ozempic and Wegovy? That's a kind of important thing to know. What's the difference between
I think this is really important to show people that I like to think about using AI as a first draft. Use it as a first draft. Don't think of it as gospel. Don't think of it as at the end all be all, but it's a great way to get an idea of what you're looking at.
Yep. Okay. So they're both by Novo Nordisk, and they contain the exact same active ingredient, semaglutide. The difference is their FDA approved usage, doses, and insurance companies. Okay. So Ozempic is for type 2. Aha. That's why. The approval, Ozempic is only for type 2 diabetes, and Wegovy is for weight loss.
Which you got to imagine that Wegovy has a market that's like 10 times the size.
That's why they're listed differently. And as you can imagine, for those that are unfamiliar, if you have type 2 diabetes, which is the majority of people with diabetes, that is highly associated with obesity.
Right.
Highly associated. For many people, obesity causes type 2 diabetes. If you solve the obesity, you also solve the type 2 diabetes for many people. There's obviously a bazillion subcategories and not always the same, but okay, that's the important example. Ozempic is for type 2. Wegovy is purely for I want to lose weight. So thank you for that the distinction. So Ozempic, this is type 2, and Wegovy, this is that. Okay. Good that we got that down. Now let's go to the long-term potential.
And I'm really curious what this is going to say about long-term potential, because this is so tough for pharmaceutical companies.
Yeah. Okay. So how is this company going to grow? Balanced. Volume-led expansion. So more people taking the drugs versus price headwinds. Good job, Gemini, for identifying that. New products and new services and geographic market expansion. Okay. Sales and marketing. Strategic investments of savings from 2025's company-wide transformation into commercial efforts. So those
i.e.
firings, those firings are going to be reinvested into the GLP-1 portfolio. So that tells me they're going to be going even more in on GLP-1s.
Mm-hmm.
The business is going to be even more dependent on GLP-1s, and that's an opportunity for them. Okay. New distribution, rapid expansion into self-pay channels. through Novo Care Pharmacy and partnerships with telehealth giants like Ro, Life MD, and Costco. So make it easier for patients to get this drug. I can very much see that being an opportunity. Geographic and market expansion, the Wegovy rollout continuing in more international markets. International operations expected to grow while U.S. operations decline.
Now that's interesting. So Wegovy, the thing that's growing like crazy, is expected to decline in the country that probably has the highest percentage of obese people in the world.
So at least the number of paying customers for the product, for sure. But they did say 20%. They were mulling a 20% price discount, right?
So maybe that's
a pretty big headwind to overcome. Yeah. Okay. Acquisitions, the recent acquisition of Akaro Therapeutics and a $10 billion bidding war for Metsera, which it lost to Pfizer, indicate an aggressive but currently challenging mergers and acquisition strategy. But they recently bought a $10 billion company. Okay. Pricing power, big red, significant pricing erosion due to U.S. Medicare negotiations and most favored nation agreement without realizing prices falling. For those that I believe, most favored nation basically means whatever drug you are selling to another country at the lowest price, you have to give the U.S. consumers that same price, which has not been the way that it's operated in the U.S. at all. Like, ever. So if this goes through, that is a huge challenge for pharmaceutical companies and biologic companies. But I would agree that this is definitely the biggest red flag.
Oh, absolutely.
New products and new services, the launch of oral Wegovy in January of 2026.
So a month old.
Yep, for a 7.2 milligram dose sematype and Cargi sema. So anyway, new products coming to market, and then customer retention, chronic nature of diabetes, obesity ensures retention, but market share is being lost to Eli Lilly's more effective tirzepatide. Okay. So overall, new product expansion, geographic expansion are big pluses, direct to consumer distribution, acquisitions, and then the worst would be pricing power. So let's ask this question. Why is Eli Lilly taking market share from Novo Nordisk's obesity drugs?
I mean, yeah, here's one. We've got someone saying that it seems to be doing, Wegovy seems to be doing well in the US, but Eli Lilly might have a more effective pill in phase 3.
So Eli Lilly is gaining ground on Novo in the obesity space due to the superior weight loss efficacy of its drug Zepbound, that's the tirzepatide, and its more aggressive manufacturing expansion. While Novo Nordisk was first to market, Eli Lilly's dual action approach is currently winning the battle of the molecules. Superior.
Isn't that the whole ball game?
Yeah.
If you don't have the best product and you don't have superior manufacturing capabilities.
The most significant driver is the chemical makeup of the drugs. So Novo Nordisk is a single hormone mimic. It helps patients lose 50% of their body weight. Zepbound is a dual hormone, so GLP-1 and GIP, because it targets two different receptors. Patients lost 21 to 22% of their body weight. That's a significant difference. Significant. Doctors and patients increasingly favor the drug that offers a higher ceiling for weight loss.
This next part is important too. The supply chain and manufacturing velocity.
Both companies have struggled with shortages, but Eli Lilly has been more aggressive in securing its own manufacturing capacity, has invested $18 billion in new manufacturing sites, including Indiana, North Carolina, and Germany. Novo has relied more heavily on third-party manufacturers like Catalent. While Novo recently acquired several sites to catch up, the integration process has been slower. So it's just about, is the drug available? And then
now they might be changing. We've got someone saying that that Novo Nordisk is changing. The point is that if they are changing, they're behind the 8 ball now.
Zepbound's launch. Lilly launched Zepbound at a price 20% lower than Wegovy.
Yeah.
Okay. So Zepbound appears to be clinically superior, and it's cheaper, and it's more available.
I mean,
I understand why.
Oh my God, that is like strike one, strike two, strike three.
Yeah. By offering a deeper discount to pharmacy benefit managers, Lilly secured preferred status on many insurance plans, making it the cheaper option for millions of patients at the pharmacy counter. Lilly has Lilly Direct, a digital pharmacy, so very similar to Novo Direct, which bypassed some of the frictions. Novo has been slower to roll out on their end. So this is Novo Nordisk appears to be a Me Too versus Lilly.
If memory serves, because I've owned a very small piece of Hims and Hers, Novo Nordisk had a CEO that they got rid of over a very short period of time. And I think what we're going through here is why that happened, because they don't have superior manufacturing capabilities. They did get undercut on prices. I mean, I understand what's happening here.
Yeah. Yeah. Well, as you dig into this story a little bit more, I'm kind of like, should we be researching Eli Lilly?
Yeah.
Which can happen in the research process. And then there's the next gen pipeline. The market is already looking at what's coming next. Lilly's pipeline includes, I'm not going to even try. Yep. And I'm also not going to try a triple harmonic mimic,
which gets up to 24% weight loss.
A daily pill and a triple. Retatrutide is showing weight loss 24%, the highest ever. And the perceived innovation leap have given Lilly a psychological advantage with investors and prescribers, positioning Novo as the older technology in the space. Yeah, this is so 2 years ago versus the new stuff. All right. Weight loss difference, winner Lilly. Mechanism, winner Lilly. List price, winner Lilly. And then first to market. So nobody cares.
Novo Nordisk is MySpace.
Yeah. Yeah. I mean, I'm sure that they have what to watch next. Novo is currently launching an oral version of Wegovy and a new combination drug called CagriSema, which they hope will match or exceed Lilly's weight loss numbers and reclaim the market lead. Okay. So here's an important point about investing in pharmaceutical/biologic companies. Yep. These stocks move on clinical trials.
Yeah, this is why I don't invest in this area.
Huge moves based on clinical trials and the outcome of clinical trials. So you have to be comfortable with that fact, and you have to be comfortable. You're betting that they can one up a clinical trial that already exists. So an oral version of Wegovy. Will the oral version of Wegovy still be single action? Because if Lilly already has a triple action, it is still a single action medication. It contains the exact same ingredient. Okay. So it's just a needle free. Their multi-active solution is the Cagri. All right. So the Wegovy pill is defensive and exploratory play. It's meant to capture needle phobic, lower manufacturing costs, and compete on price. Yeah. So this is where Gemini / any AI would come in to be like, what the heck is the difference from a clinical trial perspective? Yeah. Either way, with that all in mind, that took way longer than it normally takes for these things, but for good reason, because that's very much the story.
Well, right? We're showing people that this is a fundamentally different industry that you can't look at the same way as the other companies we've been covering.
Not at all. Tuesdays. So with that basic overview, which was far from a deep dive, what do you guys think? Red, yellow, green for Novo's growth potential over the long term. Red looks quite dismal. Yellow looks quite good, and green looks quite exciting and fantastic to see what's gonna be coming next. So red, yellow, green.
I don't want to affect what people are gonna say as it comes in. But that was eye-opening. That was very interesting.
An important thing when it comes to investing is you need to be looking forwards, not backwards. Backwards looks pretty darn good, except for the stock price movement over the last year. But the trailing numbers look great None of that matters if the forward numbers are going to look horrendous. So yeah.
I agree. That was eye opening.
We agree.
I'm a red.
Well, I am also a red. I am also a red. I don't. Everything that we just read, assuming that it's accurate, seems to be that Lilly has a better product at a better price with better manufacturing, and it's coming out more. And importantly, actually, let's really focus in on this. Let's pull up Lilly, and go to their segments. So, Humulin. Okay, this is Mounjaro.
Holy moly! Look at how fast that's grown.
22 billion. Tradjenta? No, Zepbound.
Look at how fast those have grown.
36 billion. This is in USD, I assume. It's got to be. Yeah, this is a US company.
Wow.
36 billion, from 500 million to 36 billion. Let's go to Lilly's revenue.
What if you pull that out? What are they expecting? Okay, there you go. Now, Brian, I just want to say one thing. Because this is not where anyone's research should stop. To be clear, it is entirely possible, and we'll talk about this because we'll get to valuation in just a minute, but it is entirely possible that if you know more about this industry, it might be the greatest time to buy Novo Nordisk because you believe that they've got something coming down the pipeline that is underappreciated.
Yeah.
That's the hardest part about investing, is that the things that we know are in the past. And those are the only things that we can know. The things that are in the future is what affects the stock price. That said, this ain't looking great for Novo Nordisk.
And what we can do with really quick, shallow dives like this is we can say, well, the market believes that Lilly's revenue is going to grow 20% per year over the next 2 years and 25% over the long term, where it's expecting Novo's revenue will essentially decline over the next few years, and its EPS will be quite slow.
And where you get your outperformance as an investor is if you're like Joel, and if he has the conviction and the knowledge to say, hey, look, that Wegovy pill, I think it's going to grow the same way we just saw. Or if you know that it has superior tolerance as a pill. I'm not an expert, so I'm not going to say I know those things. But if you're right, then this is actually an opportunity in Novo Nordisk.
So, but this is saying, so Lilly is closing in on the $1 trillion market cap, by the way. I think, does Lilly have a pill coming out? I think it just said it won.
These had the three, the triple.
Yeah.
Yeah.
So yes, yeah, they have one. It's currently waiting FDA approval. It's one of the most anticipated drug launches of 2026. Novo Nordisk beat Lilly to market with the Wegovy pill. Lilly is positioning as a major component with a focus on supply shortages that plague. And the launch, the FDA decision is April 10th. And they have a national priority voucher. Has already built $1.5 billion inventory of the pill expected. Yeah. So again, the Wegovy pill, first to market. But this one looks like, if they can get an approval, clinical weight loss looks to be similar. Anyway, the Wegovy pill looks to me more defensive than it looks like more a defensive play.
Even if it came out first, I agree.
Yeah, than a growth play. Anyway, this, I know that we just took a whole bunch of time here, but that's the story. Yep. That is the thing that matters, right? In many ways, the key metrics, which we will look at, these are again all backwards looking. But if this is bad, the reason that we put these first is
because they're more important.
If you're going down here and you're like, I hate the business, or the moat's terrible, or the growth is terrible, this is when you kind of just like stop your analysis, right?
Yeah.
You don't have to keep going.
If we don't finish the rest of this, I almost feel like that would be okay, because we're setting a good example.
Yeah, but we're here. These shouldn't take that long to do. I'm actually guessing, if we move on to the key metrics here, I'm guessing the key metrics are going to look quite good for Novo, because again they're trailing numbers.
Yeah, look at that.
Okay. So green, growing fast, free cash flow conversion is good. EBIT to interest expense. I'm not going to even research these. I'm just going to assume that all these are correct, even though we do know that this is the one that AI struggles with the most.
Yep.
The most. I'm going to assume that all of these are accurate and that the numbers for Eli Lilly on a trailing basis all look good. Let's assume that.
Let's move on to the risk, because I think
let's definitely take a close look.
I'm really curious to see what Gemini tells us about the risks.
Yeah. Next is going to be risk analysis. So let's enter the risk prompt and see what it highlights. And it's already told us multiple times: pricing power, pricing pressure, pricing pressure. So okay, overall risk level, high risk. Outside forces, pricing regulation, and competition.
Yep.
I would say spot on. It's got good cash flow and aggressive stock repurchase program. Okay.
I wish they would put those stock repurchases into manufacturing.
Side note here, there's lots of going on here that indicates to me.
Well, there are people who said it was 6.
This might be a phase 6 company, at least temporarily.
Right. Well, and that's the thing about pharmaceuticals. They could come out with a blockbuster hit next year and then everything else is different.
Yeah. And Brian, you and I recently had a kind of in-depth conversation about this. What defines a phase 6 company? What is the thing that says, yes, this is a phase 6 company? You might just think revenue declines. I don't think that's complete. We've since refined it to be, you're not in stage 6 until you've had 2 years in a row of revenue declines.
Mm-hmm.
Even that might not be sufficient. To me, it's more like 2 years in a row of revenue decline, plus a narrative about why you're in stage 6.
Sure.
You know what I mean? Because otherwise, if you sell oil and oil's down.
Right. Like that's exactly.
You need financial numbers that are heading down and a believable story as to why you are in a permanent state of decline. Novo's got both. Excuse me. No, they don't. Novo's revenue is still growing on a trailing basis, but they definitely have a narrative. They definitely have a narrative. Okay. Let's get back to the risk assessment. So is customer concentration a risk? Revenue is heavily concentrated in a single molecule, GLP-1, which accounts for 74% of sales. So this is not end
user concentration.
Right. Well, patient level concentration is low. Geographic concentration is high, with the U.S. representing 55% of revenue.
Which is why the U.S. government decisions are such a big deal.
Are wholesale. I'm personally not going to say that this is a concentration risk. I don't think customer concentration is a risk. If you want to look at it from a
outside forces,
sales, I would not say that customer concentration is a massive risk. Disruption, yellow. The primary disruption is the oral GLP-1 formations, where Novo is the leader, having the launch of Wegovy pill in January. Emergent disrupting technologies like gene therapy for obesity remain in early stage and do not pose an immediate threat.
To me, it's a red because they've been disrupted by Eli Lilly.
Yeah, so this is looking at it from the angle of something new comes along.
I get it,
and wipes it away. We're saying this is more of a competitive threat.
Yep.
Outside forces, red. Medicare price negotiations under the Inflation Reduction Act are key subjects of maximum fair price negotiating in 2026, leading to significant revenue headwinds. Management issued a 2026 profit outlook of minus 10% at constant exchange rates, specifically citing pricing pressure and regulatory shifts. And 340B program, a $4.2 billion rebate reversal is a one-time profit lift in 2026. The underlying regulatory environment is deteriorating. Competition.
There you go.
Red. Market share loss. Global diabetes value market share decreased to 30.1% by intense pressure from Eli Lilly's tirzepatide. Mounjaro Zepbound is scaling faster, with Lilly's valuation now 3 times larger. And the persistent use of compounded GLP-1s in shortage. So
Yeah, we'll get to
Yellow,
that in our valuation, but I think it is a good point.
yellow, red. So what do you guys think? Overall
Risks.
execution risk here. So again, we're talking about execution risk. Can the company execute? Is what the company needs to do to turn around the narrative on Wall Street? Is that a high execution hurdle? Is it a medium execution hurdle? Or is it an easy execution hurdle based on where it is today? What are people saying?
We got a couple coming in. All are the same as what I would say, which is red, with caveat that mine is a very uneducated opinion.
I would say high. There's somebody is clearly eating their lunch, and they have to execute on their pipeline that they have essentially to regain what they're losing. Not to mention they have to navigate regulatory, they have to navigate the US government, international governments. They've got a lot of challenges that they've got to overcome. That to me is not a low risk thing. Their business isn't disappearing. The business isn't at threat, but can the company return to growth? That's going to be a very challenging thing to do.
And this is a good point here. They're plowing all that money back into share buybacks when they have an inferior manufacturing capabilities. That doesn't seem like building for the future.
That is the phase 6 kiss of death.
Yeah.
When you're in, this company is not in phase 6 officially. They're in danger of heading there. When you're in phase 6, so one thing we built into Stock Simplifier, if you say you're in phase 6, look at what happens to the valuation. We just turn it off. We don't recommend doing valuation work on companies in phase 6 because if the company's earnings are permanently impaired, the PE ratio is wrong, buying back stock is wrong, paying a dividend is wrong. You need to divert all resources to returning the business to fixing operations. And spending money on a low stock price is often a disastrous use of capital. Again, if you are indeed in phase 6.
Which we don't know yet.
Which we do not know yet.
But that is what the narrative is.
If you choose capital return, again, we think that the trailing numbers are the way to go. We'll look at that, but it
might be worth looking at the forward numbers.
I'm just going to say that looking at the forward numbers is definitely the thing to do here because the trailing, if we're at an earnings peak, the trailing numbers are going to be lies. It's the forward numbers that are going to tell more of a story.
Well, let's see what it says.
Yeah, let's do just that, which is why you never look at any one metric. They can be an indication, but you need to look at multiple metrics. All right, let's close down these. All right, so let's go to ratios. So first we'll start trailing, and I just know they're going to be screaming fantastic. So price to earnings?
13.
13 times trailing earnings. Okay. The average is 24, although
it's a weird graph.
Average. Yeah. All right. So cheap on a price to earnings.
That's about 50% discount from the average.
Price to free cash flow. Graph lines. Price to free cash flow. 23 times trailing.
It's about average.
They got down as low as 13 times and as high as 71 times at the peak. So 23 times trailing. So on a trailing basis, looks quite good.
I mean, it looks from free cash flow basis, it looks fairly valuable. I would have expected it to actually look cheaper.
Forward numbers. Okay, this company is trading at 14 times.
Or let's call it 15.
Can we extend it?
There you go.
Yeah, 15 times forward earnings. How about free cash flow? Price to free cash flow. 24 times.
I mean, that doesn't seem quite so cheap to me. 25 times 15 is 15 is reasonable. Ooh, look at those.
Yeah, I bet if we go down, to the analyst estimates. So
Ooh.
this is important. So these are the long-term revisions to look at. So what do we have? Revenue. So these are the revenue revisions for 2025. So it was 400 and
No, that's for this year. That happened in 2025, but it's for this year.
okay, you're right. So what number? No, pink.
Yeah, for fiscal 2026 this year.
So which one are we looking at? Green?
That's next year.
Okay. Next year, already trending downward. So these are analyst estimates. Analysts are reducing their numbers quite significantly. Do they do the same thing for earnings? Yeah. The trend here is that analysts are pulling back on their earnings. So their earnings estimates are rapidly dropping. Again, just for comparison, I bet if we do Lilly and if we go to estimates,
we're going to see the opposite.
It's possible we will see the opposite there.
You just got to give it a second to load. It just takes a second. There you go.
Yep. So Eli Lilly,
trending up ever so slightly, but trending up.
Look at that. Trending up.
What about the revenue? I want to see. Just give it a second. Yeah.
Yeah. The numbers that are being written into these companies are basically Eli Lilly growing, Novo Nordisk shrinking. Okay, but on a
to me, those are both yellow.
Yeah, I would also say yellow. Okay, now that we've done all of that work, overall, what do you think of Novo Nordisk? Green, great company, super interested. Yellow, I have some questions, but I definitely want it on my watch list. Red, this company is not interesting to me at all. Need to pass and move on to the next idea.
Now, while those come in, Brian, I think it's always important to juxtapose this against how could we be wrong about this? And this is a fair point. Look, less than 0.5% of Americans who are overweight have a weight loss treatment. So people aren't going to stop getting overweight forever. Prices are going to decline, but this is the key. If volume can make up for that price decline, then it could be a great time to enter. I have no idea how this is going to pan out, but those are the dynamics that you should be thinking of.
Yeah. So that is a completely fair point. Even if they cede market share, is the market so enormous?
The pie could be growing.
Is the pie so gigantic that their revenue and profits could still grow from here, even if they cede market share? And could they get there? These are the things we have to balance as investors. Now, one side note I do want to pull up. I am personally mentally scarred from investing in companies like this because of this company here, Gilead Sciences. For those that do not know Gilead,
you got to pull that chart up and pull it back more.
Yeah. Oh wow, they're actually. I invested in Gilead here, and very similar story. Wow, Gilead's doing something right. So this is when they came out with Gilead Sciences came out with a hepatitis C drug, and they went from $20 a share to $120 a share. So they six-bagged in like 18 months. And if you looked at the company's financials here, their price to earnings ratio, actually, we should be able to pull it up. Their price to earnings ratio at that time was like single digit, and the company was producing triple digit revenue growth. So if we go to ratios,
it might not go back that far. I'm not 100% sure. Oh no,
nope,
it does.
I see it.
It does. Yep.
So remember the stock 6x. We're going to look at their trailing price to earnings ratio.
You can just show them the number though there too.
Oh yeah, this is going to be crazy. All right.
You could narrow that timeline down there. There you go. Those are low numbers right there.
7. So right about, where was it? Here? Somewhere in here.
And so you're sitting there and you're like, this is the greatest deal in the world. I don't know why the market's so stupid.
The peak price to earnings ratio during this time was 9.5.
The peak.
The peak price to earnings ratio during this time frame was 9.5. So I was looking at a company with triple digit revenue growth, huge profit growth. The stock 6x'd, and it was trading at a single digit PE, And I was like, I don't get it. This is a cheap company with great growth and everything like that. What happened? Let me show you why this happened. If we go to their revenue, I don't know if it'll go back that far. Yeah, this is what happened to revenue. So they came out with this drug, boom, boom. Look at that revenue growth, enormous. And then 32 billion. And here we are 10 years later. 10 years later, their revenue still has not caught up to what they produced in 2015. So this company, Wall Street sniffed this out. Wall Street sniffed out a huge decline in revenue, and they priced the stock accordingly. Now, this was a completely different scenario because their drug cured hepatitis C.
Yeah.
Novo's drug does not do that. So I doubt the decline is going to be this severe. But this is just, to me, a great case study of investing in large cap biologic drug companies. It is the trailing numbers and the price to earnings ratio were extremely low. And at the time, Gilead was like, we're buying back our stock. Our stock is so cheap. And they were investing money like crazy. And it was effectively dead money for 10 years. The stock went nowhere for 10 years. So I don't think Novo, the business, is going anywhere. The volume could be huge and everything like that, but we're investors. We want to know, if we buy this stock, do we have good odds of outperforming the market? To me, I think a lot of people are in the same boat. This is just in my too hard pile.
Yeah, which is not to say that it won't do well, but
nope.
But I mean, half of investing is knowing when to say I don't know. And actually, I say half. 95% of investing is knowing when to say I don't know. This is too hard. Yep. And that's what I would say coming into this.
Right. So there could be reasons to like this stock. I understand why people are putting it on a radar. The stock is down 66%. It has a drug that is an enormous category. The volumes could be huge, but the pricing pressure here and the competition are going to be the narrative for the next, I don't know, year, 2 years, something like that. So they need something in their pipeline. They need a clinical trial to really break their way to kind of get the story turned around. But this to me is definitely too hard and not nearly, quote unquote, cheap enough. And I would even have any valuation model that I could put forward, I would personally have very low confidence.
Yes.
Because this is not an easy company to value, at all. So you can, it's just a hard company. It's just a very hard company to value. And we really got off a track there, by the way, Stoffel.
That's okay.
As a friendly reminder, if you want access to those AI prompts, if you want access to the course that we made, if you want access to the checklist that we use to research this company, start to finish, it's called Stock Simplifier. Stoffel will share a link in the chat to do just that. And you can see how useful those prompts are for surfacing that kind of information about the company.
That I learned a lot during this one.
Good. Yeah, me too. I definitely learned a lot about the business. Well,
I'm super curious to see what people want to do next. Personally, kind of hoping it's not in this industry, just because I don't want to go into it knowing I'm going to say it's in the too hard pile. That's where I thought I was going to say.
It's very much in the too hard pile, but I understand why people are interested in this company.
Yeah,
I'm very, very much interested to see why people are interested in this company, and I understand why Wall Street is pricing it the way that it is. So, if you are a Novo bull, I truly wish you luck. But pharmaceuticals and biologics is just a hard business to analyze. Well, thank you guys so much for spending some time with us today. Tomorrow morning, Wednesday, February 18th, we will be putting some stocks for voting in our newsletter. I think I put on there AppLovin, Axon, Palantir, and DraftKings.
Wow, those are 4 big names right there.
Yeah, so which one of those do you want us to research next week from scratch using Stock Simplifier? Vote in our newsletter, which you can sign up for at longtermmindset.co. And we love getting suggestions. So if you have stocks you want us to research, please let us know. We absolutely love doing this process. We think it's a great way to learn how to research companies the right way. Thank you guys so much for spending an hour of your time with us. We super appreciate it. And sorry for the tech problems at the beginning of the show. We look forward to seeing you guys next week.
Bye, everyone.